Hello, everybody. It's David with Keeping Current Matters. And I'm excited to welcome you here to the August 2020 monthly market report. So as we get started, we're going to be talking a lot of things today about the economy, about housing recovery, where home prices are going, and then really what's causing people to move right now. So let's go ahead and get started. So I pulled a quote here from the Wall Street Journal to start with. It says, a strong economic recovery depends on effective and sustained containment of COVID-19. Economists said in the latest monthly survey by the Wall Street Journal, with 91% of business and academic economists agreeing somewhat or strongly that economic recovery depends on containing the pandemic. So where we know we are here in August is that as we look to economic recovery that is starting to happen, and I'm going to show you that here in just a minute, ultimately the strength of that is going to depend on how well we contain and really manage COVID-19 going further. Now, all of this is going to depend on the treatments that are available, the vaccines that are available, things that are in the process, and it's going to be largely dependent on when those are available to people to use, and people feel more comfortable about being able to go out and safely interact with one another. The interesting thing is, though, as we think about the last several months and what's happened with this external health crisis and how it's impacted our economy, is now we're starting to get a look at what's going on with consumers. And so what I want to bring in here is just a look at consumer spending as compared to January 1st. So when we look at this, you can see it there clearly. It's a tale of different industries. If you're in the grocery business over the last several months with everybody eating at home and, people not being able to go out into restaurants, and some of those in many states, shut down during the quarantine. The grocery business has grown during that time, but other businesses have fallen. You see that deep fall there really in the end of March and into early April, but then hitting a bottom and starting to come back up. And I think what we're looking at right now, economically speaking, is it varies by the different type of business. Apparel and general business is starting to head back. Transportation, things to do with travel, not as quickly. And I think that's going to be the trend going forward, that we see some businesses recover quicker than others. But suffice it to say, as we've kind of bottomed out, businesses are recovering and heading that way. Now, we're right here at finishing up the second quarter. We finished that up about a month ago. Now we're in the third quarter. And I want to go back and just talk about, if you remember where we started talking about this, of what economists were saying about what we would see with GDP. So in the second quarter, the forecast that experts delivered, the average was right at negative 31%, meaning the economy would constrict by 31%. You can see those estimations there. Now, what actually happened is the economy constricted in the initial advanced estimate by 32.9%. So very, very close to what these experts said would happen in the second quarter. So I would offer right now, if we're going to look at what those experts said then, we have to look at what they're saying right now. And I think it's encouraging relative to economic recovery. And those same analysts just forecasted, we have a few more for Q3. So you can see on the left here, the green are the original 5 forecasters. In the right there on the blue are the additional 3 forecasters, and all of them anywhere from 15 to 25% economic recovery over the last quarter of the second quarter as we go forward. So we're starting to see economic recovery happen, and there are a lot of questions going into the fall. I'm not saying that that's not the case, but we are seeing economic recovery happen, and certainly forecasters that we're very much, on average, correct in the second quarter, looking at what they're saying going into the third quarter. I think this is interesting perspective from Morgan Stanley here. The Chief Investment Officer, Lisa Shallett, says this: indeed, the worst ever GDP reading could be followed by the best ever growth in the third quarter. So we're seeing this dip down. We're seeing, certainly businesses that have been impacted, but then we're seeing this rebound back from it. Some quicker than others, some that, certainly businesses have been impacted small businesses, large businesses that we've all seen that have, ultimately maybe had to close down or something like that due to the stresses and due to the things that happened, during the coronavirus and the quarantine. But really, as we look at general economic numbers, we should look forward to seeing some significant improvement going forward. Now, this leads to, as we look at the overall economy, what's happening in the housing market? How are we recovering there? And I put together a couple of clips from several economists from across the spectrum and what they're saying, and it's very interesting. It almost reads like a movie trailer here. You see Realtor.com saying an astonishing rebound, shockingly strong from Housing Wire. Adam Data Solutions says pulled something of a high wire act in the second quarter. And Zillow says stared the pandemic right in the eye and hasn't blinked. It's been nothing short of remarkable. All of these things that are descriptors of housing market recovery. And the way the reason this is so interesting is this is not the way that economists normally speak. They speak very factually, very much based on the data, and they're using words like shockingly strong, hasn't blinked in the eye of the storm. I think really summing up that where the housing market is right now is blowing away what experts have thought, and really underscoring the strength of housing right now and the importance of housing. I brought in a quote here from Realtor.com, kind of coming off that. Despite the crippling and ongoing coronavirus pandemic, millions out of work, a recession, a national reckoning over systemic racism, and a highly contentious presidential election just around the corner, we got to remember that, the residential real estate market is staging an astonishing rebound. So we're seeing housing play a critical role. And, we've talked a lot about this. You can go back in and look at the impact that one home has on, the national economy, but certainly local economies, and just that effect of housing and economic recovery. But if we want to really look at what's going on, we have to start to look at behavior. We've followed showing time since the start of this to say, okay, that's going to give us that leading indicator of people going out and looking at houses. And you can see here the number of weeks since about the middle of May that we've seen weekly showings be up as normalized back to January. We saw this dip down in late March and April, but coming back and people going, you know what, we're going to go out and look at that house. The reasons that we had for looking for a home have changed or have grown or become greater during this time. So continuing to see that on. Now, I will say, I do believe a lot of that is filled with pent-up demand. Those that couldn't get out in the spring or had plans to buy a home in the spring, and they're, we've been the beneficiaries of that over the last several weeks. And as we go into the fall, I think we're going to start to see that normalize out a little bit. But the showings and the activity out in the market is very, very strong. Coming from Ivy Zellman, she says this: whether in terms of pending contract activity or our proprietary buyer demand ratings, the various measures of demand captured in this month's survey can only be described as shockingly strong. Another one of those quotes we used before, in spite of the resurgence of COVID-19 cases. So we're seeing that come back. We've looked very often at the NAR Housing Market Recovery Index, and this index really takes four things: demand, supply, price, and time on market, combines those together and creates this index. And you can see the dip down and rise back up here. And we're now at a point that is above the February 1st baseline. Certainly not cumulatively in this year. We're not ahead of where we would have been had we not gone through the pandemic. But that index is now reading above where we were in February 1st, saying, we are recovering strong in that aspect. So I think the question that starts to come up and is on a lot of people's minds, we've talked a little bit about this, is what's going to happen to prices? What is going on with prices? Many, have talked about experts that have said, hey, we may see price depreciation during this time. Quicken Loans came out and said this: The pandemic has not stopped the consistent home price growth we have witnessed in recent years. And I think this is indicative of the recovery and coming through that. We've seen housing literally become more important through this pandemic, more important to people. The needs become more important, and really driving that demand. Now, there's a large range of projections on what's happening with housing prices. If you've seen this before, this is a collection here of 9 experts and what they're saying about housing prices, anywhere from 4.4 appreciation, 4.4% appreciation, all the way to the very right to about 1% depreciation. Now, the interesting thing here is that CoreLogic just revised their estimate. They were saying originally we're going to see about 6.6% depreciation, blew us away. We talked about it. Our research team reached out to CoreLogic. We respect them, but disagreed in this case with that projection, because we believe supply and demand will always dominate pricing. We see those being very strong, and I'll talk about that in just a minute. But they've come back and revised this, and I would expect they may revise it again. But this gives you a look at what most are calling for. 7 out of these 9 are calling for positive appreciation going in the next 12 months. Now, I want to go back to that CoreLogic issue, because here's what they said. I think it's fair to read this. Last month's forecast of a 6.6% home price decline through May 2021 has been revised as projected unemployment rates through 2020 showed improvement. The recent rebound of home sales suggests the pandemic did not derail home buyers. If anything, I would interject there, it's made home more important. Who continue to be motivated by historically low mortgage rates, this coupled with the declining supply of homes for sale could shield home price growth from the impacts of the current economic uncertainty. As a result, the latest forecast reports home prices will decline a moderate 1% between June 20 and June 2021. So again, that's been a massive correction they've made to their forecast. But again, the story right now across the country is that as we look at listings, they're lower than they've been, even though we continue to bring listings to market. Now, this is the picture of, like we talked about before, a store that can't keep the shelves stocked fast enough before people come and purchase the products from them. We can't bring homes to market, as fast as people are coming in and buying them. And I think right now, as we look at this, this is a story that we're seeing across the country. It's a great place as well to look at your local market and say, what's happening there? What's happening with supply in your local market as you start to give people the outlook for what pricing is doing locally there where you're at. If we want to look the other side of demand, move.com tells us this: the summer home buying season is off to a roaring start as buyers flooded into the market. The Realtor.com monthly traffic hit an all-time high of 86 million unique users in the month of June 2020, breaking May's record of 85 million unique users. So the month before is 85 million, June is 86 million. And I think we're seeing that. We're seeing people say, you know what, we now have different needs in the home that we need or we're looking for. In some cases, maybe less space. In some cases, more space. In some cases, we need a backyard. But those things have changed. The other side of demand is to look at purchase applications. And what we can see right now is we've been through 11 straight weeks of year-over-year increase, meaning applications are higher this year than last year. Now, again, I want to say I think we're the beneficiaries of a lot of those weeks of pent-up demand that that as we look in the rearview mirror and we head into the fall, those are going to be things that we're going to be watching, and we're going to say, okay, how is demand going to look going into the fall? But I think we can fairly say across the country, we don't have the supply or the inventory we need for homes, and we have a lot of people that are looking and ultimately going into contract to buy a home. Many of those in multiple offer scenarios, meaning somebody else didn't get the house, so they're still looking for that. Now, interestingly, in that the National Association of Home Builders has come out and said this, of American adults considering a future home purchase in the second quarter of 2020, about half, call it 49% there, are not simply planning it, they are actively engaged in the process to find a home. This is a significantly higher share than the comparable figure a year ago at 41%, which suggests that the COVID-19 crisis and its accompanying record low mortgage rates have converted some prospective buyers into active buyers. So not only are things more important today, demand is being driven by what I would call white hot interest rates. People are saying, now is the time to do what we're going to do. We can maybe afford more home. We can afford the home that we want now. The payments at a price that we can afford, or they're just simply saying, hey, look, if we're going to do it, or we were thinking about doing it in the next couple of years, due to the interest rate environment, we're going to go ahead and make that move and make that decision, because it makes more sense. We don't know where that's going to go. Interest rates, certainly as we look forecast, are forecasted and projected to remain low, but as the economy improves, we know that those will start to edge up. The gift of certainly of economic downturn is oftentimes lower interest rates, and we're seeing that right now. But as the economy improves, we should expect those interest rates to go up. Now, the other side of that is, why are people moving today? What is causing them to make those decisions? And I want to bring some interesting information into this conversation, because I think there are specific things happening right now that are causing people to say we want to do something different. And this is a survey that came out of Realtor.com, comparing an April survey of what people said they needed in a home to actually July to why they actually moved. So if you look back then, you see interior space, outdoor space, kitchen, better technology. And then we look to today, or the most recent information in July, where interior is still there. The desire to own, very interesting. We've talked about how home ownership rate in this country has grown over the last quarter, but that desire to own is very important to people. Number 3, the move from the city to the suburbs. We're seeing actual data right now showing, hey, people, say, I don't want to live in an as dense environment. I want to be in a, less dense environment. I want to move from a city to a suburb because of the fears of maybe being in a tightly congested area or contracting the coronavirus. Number 4, more outdoor space. I want a yard for my children during this time because we're all at home. I want a different option. So we're seeing this come through in the actual data that people are saying, hey, there are different needs that I have. There are different things that are happening in my life, and I'm going to make a decision on the home that I purchase based on those. Another big driver of this right now, and I think we know this in our head, but data is coming in to prove it, is the plan to buy a home due to the possibility of remote work. Now, this is very interesting. 2 out of 3 of the buyers surveyed in this case said they are planning to buy a home that fits their needs for remote work. Now, I don't know if that means that 2 out of 3 are going to be working from home, but it definitely means 2 out of 3 are saying, I have that need. I may be going back to work, but if this happens again, I want a place to work from. And this need to have a home that I can work from, that I can, not be on top of one another in doing whatever I need to do, or, just having the facilities and the access to a place that's quiet that I can work from is extremely important today to people, and driving a lot of these decisions that people are making to go out and buy a home. I think the other thing we're seeing that kind of goes back to what we talked about a minute ago with the National Association of Home Builders is we're seeing a surge right now in urban high-end listings. This represents the people that have the means saying, hey, we're going to move from this urban environment to a suburban environment, or to, we've talked about the second home market seeing high demand, and the Hamptons and Palm Springs and Greenwich, Connecticut, and places across this country where people are saying we're going to go there versus being in a more tightly congested area. So we're starting to now see the actual data to support the fact that this is happening, whether it be the need for work from home capability, the need to get out of an urban, more congested environment is driving the moving decisions right now. Now, there's something very interesting from John Burns Consulting here that I want to bring in. It says, as states, cities, and counties around the country slowly reopen, we predict the great American move. For safety reasons, financial prospects, life change improvements, personal comfort, and employment, we expect a surge in household and business relocations over the next few months that will provide new strategic opportunities for the real estate market. So they're calling for John Burns Consulting here. We've used them a lot of times, and they're a consulting firm that works with a lot of publicly traded builders, hedge funds. Those are in our business making, these kind of large decisions relative to their business. They're calling for the great American move based on all the things that they've listed, the ability to work from home, financial reasons, life change, people just saying, look, we're making different decisions today, and it's certainly being manifest that way. So as I start to wrap up here, I want to bring in one other piece of information from Adam Data Solutions that's important right now. And this is coming out of the second quarter. It says home sellers nationwide realized a gain of $75,971 on a typical sale. That's up from the $66,500 in the first quarter of 2020 and $65,250 in the second quarter of last year. The latest figure based on median purchase and resale prices marked yet another peak level of raw profits in the United States since the housing market began recovering from the Great Recession of 2021. We've talked a lot about the significant amount of equity in people's homes today. And a lot of that due to tenure, a lot of that due to the way that people have stewarded equity in their homes over the last, since 10 years. A lot of that due to, we've talked about cash out refinances, and now people have made different decisions with the equity in their homes today. We're seeing sellers net more out of the sale of their home. Now, what does that mean? That means right now, somebody that's thinking about it has an opportunity to go out and make a move, make a decision to do that. To go out and make a move relative to, things that are important to them. This is the kind of information that we have to get in front of people. The significant equity today gives you options, and looking forward to, hey, if there are different plans that someone has, we want to help them achieve those plans and realize the potential they may have with the equity they have in their homes. So as we head into the fall, I need to certainly announce here that the fall buyer and seller guides are coming out September 4th. So take a look at those. It's information that you're going to want to get out in front of buyers and sellers that you're working with to give them the best information to make a powerful and confident decision. The other thing I want to leave you with here, and really this is, I think the thrust of that last slide, is now maybe the time to offer the professional equity assessment report. This is going out saying, do you know how much equity you have in your house? Therefore, giving you the options that you may be able to take advantage of for the future. I've added in the notes to this slide, as you download the slides, the location of the professional equity report on our website, so you can go there and download that and grab that resource. It's in the member area. You can use that, but it's a great template to give you an idea of, hey, what's a presentation look like where I can give them a professional equity assessment report. So hope you'll download that and hope you'll use that. So as always, the monthly market report is designed to give you what's happening in the market. We try to do it here in just over 20 minutes. And I appreciate you listening in, and we will be back next month with everything happening. Certainly between then, as things come up, we're going to bring those to you. But thank you for listening today, and I hope you have a great afternoon.